And once you realize that these are basically networks, and once you realize that crypto are networks where you actually own the network. So Facebook is a great network stock and it works perfectly on a log chart and it's an exponential, does all the things as you imagine. You can value it in Metcalfe's law terms, but the fundamental difference is shareholders and network users are not aligned. The shareholders make the money, the network users get the utility. Along comes crypto, you marry the network user with the owner. Okay, now you've got network effects upon network effects. This is like behavioral economics,
Right.
manna from heaven. I had lived through the financial crisis and predicted it. I had also lived through the European crisis and predicted it, and had been in Europe and had to buy a generator and food and get cash out of the bank and keep it at home, right? That's how close we were in Spain to losing our entire banking system. And as a macro guy, I knew the issue was leverage. And leverage had meant that we had a unique problem, which was there's a layer of collateral and all of this debt is against the collateral. And usually you've got like 30 claims on the same piece of collateral. In fact, the average US Treasury has 32 claims on it, or it did then, may have more now. So therefore, who owns what in an unraveling? You know, who's going to get screwed?
And the leverage was you're talking about government or corporate, or where did you see this stockpile of leverage?
I look at total leverage, financial system leverage, government leverage, household leverage, and private sector leverage. Right, so we're at 480% of GDP now, whatever the stupid number is. Right, it's ridiculous. Right. But the problem is that's a lot of claims on the collateral. So, because not everything is collateral in the system, only some things are used as collateral. Anyway, so when Lehman went bust, right, everyone's scrambling to find who owns what. And, you know, that happens all the time. So I started trying to start the world's safest bank with a bunch of family offices. I thought, you know, we could start a bank that doesn't use leverage. So then people can put assets there, their savings there, and realize they're safe, because it wasn't safe. People in Cyprus had all of their money taken out by the government. Right. So I'm like, okay, I need to do something about this, and I can do something about it. So I started that journey, and a friend of mine called Emil Woods, who was a subscriber to Global Macro Investor, who was running a hedge fund at the time, an ex-Goldman guy, he said, you need to look at Bitcoin. And I'd read a bit about Bitcoin. It's probably 2012. And I wrote the first macro piece on Bitcoin, which is, I think, the thing you referred to, which is 2013. I was just like, I saw it and thought, okay, so we've got two things here. One is this asset, Bitcoin, and that's a scarce asset in a digital world. So that's probably interesting. And secondly, we've got blockchain, which is a recorded ownership of everything. Okay, well, that solves the entire financial system. And this could be something useful for the financial system in itself as a new version of gold. So I backed out that the fair value of Bitcoin with gold at 1,300, using the kind of supply, stock to flow ratio, done badly. I'm no, statistician or econometrics expert, but I kind of backed it out and said it was probably worth $1 million. And then how I like to look at things is, okay, what's the price now? $200. Let's assume, probably rightly, that Raoul is a total idiot. So let's assume he's wrong by 90%. So it's worth $100,000 and it's at $200. That is the best single bet I've ever seen in my entire life. And I sold it after a 10x. So I'd done well from it. Sadly, I got divorced in the process, so I halved that. So there was my tax that I don't pay in the Cayman Island. I chose a voluntary 50% tax. So, it wasn't a life-changing bet, but it was a good bet. Now, had I held it on to 20,000 when it peaked, it would have been life-changing. So, okay, so I've been in it. I got out. I was nervous about all of these forking wars and everything going on. I'm like, I don't understand this. Let's wait and see. And then I had talked about it a lot, analyzed it, been involved in it, but hadn't been investing it again until 2019. Started sticking my toes in again because the market had been selling off. I was starting to get comfortable that, yes, that we got a recession coming. This is going to be a useful tool. And then 2020 comes along, and I was already positioned for a recession. But, this opportunity was like, okay, if the central banks are going to print like crazy, then that's the opportunity. So I bought a lot of Bitcoin. At that point, I was long bonds, gold, dollars, Bitcoin. And then over time, I started charting Bitcoin versus other assets. And I realized its dominance in performance was so extreme that it made no sense to own other assets, even with the fact that Bitcoin can be very volatile and have periods like now where it's down 50%. It's like, it makes no sense to own anything else. Now, I probably will take other bets here and there. But I think my core strategic, so I was Bitcoin first, then I started doing the work. I was on Twitter a lot. And people, if I were to ask anything about Ethereum, people would pile on to me. That makes me want to know more. So I start digging in.
Has the opposite reaction.
And I knew what about Ethereum and, but I started properly digging in. And I thought, this is really bloody interesting. The chart looks incredible. The chart versus Bitcoin looks incredible. This makes sense to me. So I started switching into Ethereum.
And when you say the chart looks incredible, so tell me what that means. So I've, like I said, come from the tech world. We look at charts all the time, but they're always like users, revenue, things that sort of like are not based on any kind of like speculation or
human
market
emotion.
whims. Yeah, human emotion, exactly. So charts don't lie, or they do but unless you know what you're looking at. And so when you talk about charts, I've seen I see people like do this all the time on Twitter where they're like, it's voodoo magic. They see a chart, then they draw this like crazy shape. Oh, clearly this is doing a reverse cyclone pattern and it's going to go all the way up. And so are you one of those guys where you actually do the technical analysis and you say, no, the price chart is what I'm looking at, or were you looking at other charts?
Both. So, and I'll come on to that. So price chart, I think, is the best guide of what the asset is doing, what its trend is, how people are perceiving it, and where it is versus what you might perceive as fair value. So,
okay.
You notice certain characteristics, like crypto tends to be exponential in price. So you put it on the logarithmic chart, it starts to make sense. You look at things like copper and lumber, they tend to be mean reverting assets because they get met by excess supply. With high prices lead to excess supply. So right now with oil at $100, everybody wants to make as much oil as possible. So the price comes down over time. It doesn't happen with crypto because you can't.
Right.
So you need to understand the structure of markets, where the sentiment is. Is it overly bearish? Like a day like today, it got overly bearish. And so suddenly you start to see a reversal. So these kind of things are interesting. But my big discovery and why I really started loading up on Ethereum was another chart, which was a understanding that Metcalfe's law was the primary driver of all crypto markets. And in fact, almost all of the tech stocks that we've known today.
Right.
And once you realize that these are basically networks, and once you realize that crypto are networks where you actually own the network. So Facebook is a great network stock and it works perfectly on a log chart and it's an exponential, does all the things as you imagine. You can value it in Metcalfe's law terms, but the fundamental difference is shareholders and network users are not aligned. The shareholders make the money, the network users get the utility. Along comes crypto, you marry the network user with the owner. Okay, now you've got network effects upon network effects. This is like behavioral economics,
right?
Manna from
like
heaven.
Religion meets Metcalfe's law, right? It's like now I'm tribal about the thing.
It's religion meets capitalism. It's basically what it is, right? So that is incredibly powerful. So I start looking at the fact that Bitcoin and Ethereum charts just at different points at the same point in the adoption cycle were remarkably similar. And then it dawned on me they're all the bloody same thing. They're all about adoption. So if you look at it and if you're honest with yourself, Ethereum, if you think about Metcalfe's law, it's about the number of users and then the kind of connections between the users and the applications built to create those connections. Well, Bitcoin's kind of a one-sided one, which is a bunch of people own it as a store of value, like gold. Nothing wrong with that, but there's not many applications built on it. When you look at Ethereum, it's like, holy shit. I mean, this is like the internet.
Right.
That moment is like, okay, this is far superior a bet. And so that's why I took that bet. And then I eventually shifted majority into Ethereum and then took other bets in the space to express macro views. And then if you think about it in other terms is let's look at Web3 as a network and a network of engineering talent, right? This is where it gets really interesting. Why is it exponential? It's because there are parts when everybody's trying to hire Web3 talent, right? We are, every single person I know is, right? and the actual pool of people who are capable of doing it is probably like 1,000.
Right. And they're all multimillionaires who don't want jobs.
But that's the point, is their salaries and the demand for them is exponential. The demand for the network of those guys becomes exponential. Over time, there'll be millions of trained people, and it becomes the network effects. The overall space is very valuable, but the opportunity, that ramp, that's the single most important, interesting part of network effects.
Right.
And the fact that you can own a share of the network. So even when the network flattens out and is now worth, I think, $200 trillion for the digital asset space, it's currently $2 trillion. That's 100x in market cap. That's huge. We've never had anything like this before.
Right. Like